So for the user's sake, let's talk about, or let's define what is a blue chip expensive property. Let's try understanding the definition of a blue chip property, because not a lot of people understand that. From my perspective, when you talk about blue chip expensive properties, these are properties within major city center radius, like 10, 15 kilometer radius, or one of the most wealthiest pockets of major city centers, be it Melbourne, Sydney, or anywhere else, be it Byron Bay, right? Could be anywhere. But typically, you are looking at properties which are significantly higher prices, and the yields on these properties are significantly lower, sub 300 or 3%. I would say below 3%, not even sub 3% in majority of these cases. And that is the definition of expensive blue chip property that we are talking about in today's conversation.
Yeah. And typically they've got a really high percentage of owner occupiers as well, right? So in terms of the supply in those areas tend to be quite tight, but the demand is also very, very strong because of the convenience and everything else.
Yes. And I think that's a good segue in talking about the pros of buying into these properties, right? You talk about a high-end market, which is like 5, 10, or even 15 million market, right? These markets don't see typical property cycles, right? Because you're not talking about an average Joe Bloke Australian, who is, scared of, a 1% interest rate, right?
Interest rate rise, yes.
So these markets don't move because of interest rate rises. Yes, the market might stabilize, but you don't see negative growth in a lot of these areas, or you see negligible, a negative growth in a lot of these areas. They're very stable, long-term, mature markets. So that's definitely a pro in investing in these areas. It's almost like it's a safe bet, right? You buy in this area and it's a safe bet. You can never go wrong, in buying this area, because they're tightly controlled, they're owner occupied, the demand is there, the schools are great. People would always be wanting to live in there. These are like Turex and the Brightons of, Melbourne, or Sandringham of the Melbourne, or you talk about the North Shores of Sydney. It's those premium pockets which are never going to change. Or the gentrification is already high up there and it's not going to go backwards, right? It's not that all of a sudden people start becoming poor in these areas.
Even in a GFC, yeah.
Yeah, exactly.
Yeah.
Yeah. In fact, in GFC, because they are high astute investors themselves, they actually be a lot more aggressive and they upgrade their homes because they know that no one is buying, right? And so they try to find these, what I call these is, these ugly ducklings where this wrong person has entered the suburb and they're trying to pretend rich, and now they're feeling the wrath of being in that suburb and they're trying to, cash out, and these people are like, oh yeah, I'm going to buy you out. It's not a problem. So basically you see those stories.
$40 million. I'll tell a really short story. A friend of mine from overseas, and he's like, oh, I've got a investor that's looking to buy a property in Australia. And I joked, I said, I hope he's got deep pockets. And he goes, yeah, he was looking to buy a $45 million house in Singapore. I'm pretty sure the money's not the issue. I went, okay. So it's like those sorts of buyers that you're generally dealing with the really high-end prestige blue chip properties. But what we're also seeing there in those areas is we talk about sort of a more stable level of growth. What we also see that if you're buying in a blue chip area, and I'm talking about an area as opposed to the property itself, you're buying, as they often say, the worst house in the best street, right? There's always this potential for an incredible amount of manufactured growth in that area as well. Because you have a property down the road that's sold for $5 million. You've got a crappy old house that's maybe $2 million. Still a good lot of money. But, there's a $3 million difference there. You could knock down, rebuild, and you got a $5 million house.
Typically, you think about why development works in these areas is because of the guaranteed growth, these price discrepancies of an old house versus a schmick looking, nicer looking house, right? And you were joking about this, rich people pay for convenience, right? And this is the premium example of convenience. They don't want to buy an old house spend 700,000, wait for a year, go through the hassle of, fighting with the builder, because they're overcharging.
Not like us plebs.
Yeah, they don't want that hassle. They want to basically, bring in their Chanel bags and just walk into the house and say, okay, this is one bag for you for $15 million and shush away and we are going to move it, right? Basically, that's the mentality of these people, right? And I'm throwing that picture out there for people so that, people can understand that this is the area that we're talking.
It's a bit of a generalization, but, we're invoking the...
Okay, maybe not Chanel bag, maybe a Tommy Hilfiger bag. Let's.
Oh no, that's not. Either way, we're painting a very generalized picture of the image of the fact is that there's not as much of that mortgage stress that we're talking about, because generally at that level LVRs are really quite low. Potentially as well, there's a lot of old money in these areas. So you've got properties where they're older properties, incredibly, expensive properties that have probably, were purchased for $50,000 like 50 years ago, $4 million. So you can see there where there's an incredible amount of wealth in the property itself. But you'll find that the people that are there will often be quite asset rich. If you're talking about old money, asset rich, but cash poor. So the pros of purchasing in these areas is that, one, we mentioned, potentially being able to manufacture growth a lot easier, because there's often a big discrepancy between the crappy old house and a renovated house. So big pro there. And some other things in terms of, because they are in nicer locations and everything else, well, you tend to think there is a higher demand for that type of property. However, when you get to a point when we'll talk about the cons, yes, you've got a better product, but then on the flip side, if it's too unique, then you potentially are narrowing your market as well.